Yeah, so hey, thanks everyone for tuning in to our next AMA. This AMA is with Frax Finance. I'm going to be introducing Sam, who's one of the founders. Very excited to have Frax coming onto the Avalanche Network with their tokens and to do some building. It's great.
Thanks, guys. Thanks for having me on.
Yeah, welcome, Sam. And so we're going to introduce ourselves and then, just jump right into the questions. I'm sure the community wants to know a lot about Frax and, what value they bring, how their token works. They have a very cool algorithmic stablecoin, exciting technology. So I'll introduce myself. Sam will introduce himself, and then we'll get right into the questions. As you may know, I am the community manager of Pangolin Exchange. We are the largest DEX on the Avalanche Network. And we're very excited to work with both native projects and bring in new projects like Frax to build with us. So what about you, Sam?
Yeah. So I'm the founder of Frax Finance. Frax is actually what I like to say the first fractional stablecoin, which is where the name Frax comes from. We came up with it as fractional currency. And the idea behind Frax is that there is a dynamic collateral ratio, which is the amount of collateral that's backing Frax, changes based on the price of the stablecoin. If the price is slightly under $1, the collateral ratio goes up to restore confidence and increase backing. If the price is slightly over $1, it's like $1.01, because people are buying the stablecoin, then the collateral ratio goes down because that's the market saying that there's a lot of demand for Frax and that they're basically kind of fine with it being slightly less backed. And so it's a new breed of stablecoin. It's cross-chain, so we're really excited to be on Avalanche and expand to different places, especially Pangolin. And the last thing I'll say is that the performance is top notch, which is not what you hear about with algorithmic stablecoins. We've never broken the peg a single time in our 6 months of existence, even a single time.
Wow, that is incredible, actually. It's a tricky thing to get right, these algorithmic stablecoins, but to not break the peg in all of 6 months, that's great. Really exciting. So, right, before we get into the Frax project and technology, can you just tell us a little bit about your own background? How did you get involved? What's your role right now?
Yeah, so I mean, I got into cryptocurrencies a long time ago now. It was late 2013, early 2014-ish, while I was a college student at UCLA. I heard about cryptocurrencies and actually started mining a lot of the first script coins, including Dogecoin, like the week that it came out, in college in my dorm room. And so that's kind of how I got started in crypto. And after college in 2015, I founded my first company, which is called Everpedia, which is essentially the decentralized version of Wikipedia and a lot of on-chain knowledge kind of stuff we basically bring. That's been going really successfully. And one thing I've always wanted to do is build a stablecoin. And that's just because I was always really interested in the nature of money. Is it more stable purchasing power, or is it kind of digital gold like Bitcoin or something like that? That's actually originally what I got really interested in crypto for. So I've always wanted to build something around the area of, the nature of money. So me and a few friends in 2019, we came up with the Frax idea. That was before anyone in crypto had ever said anything about a fractional way to keep a stable coin stable. Before Frax, if you guys are probably familiar, there's essentially fiat coins, which is like Tether. There's a bank account with dollars in it. And then there's the MakerDAO model, which is, there's over collateralization, which is more than 150%, give or take, crypto on chain backing the stablecoin. And then there's Frax, which is under 150% collateralized. So we came up with this. It was a totally new way to think about stablecoins.
Wow, that's really exciting. And, it sounds like you have a great background and have really thought all these problems through. and these solutions as well. So let's give everyone a little overview of stablecoins. Can you tell us, what role stablecoins play in the DeFi and crypto ecosystem and why they're important?
Yeah, so honestly, stablecoins are one of the most important things because my view of currency, my view of what money is slightly different than what maybe a lot of people in crypto or is popular to say in crypto, which is I think of currency as needing to be stable in purchasing power. And then the next question is usually stable against what? Usually, what I think of currency as it keeps your standard of living stable. That's what it does. It keeps your actual way that you live, the things that you consume, standard across time. Maybe not exactly standard, maybe there's a small inflation factor, but much better than anything else. Anything that does that better than a fixed supply. Cryptocurrency is always going to be preferred to be used in DeFi as kind of the intermediary in contracts and lending. And that's kind of why I've been really interested in stablecoins because I think things don't really take off in crypto unless there's a stable unit of account, so to speak. And currently, it's just dollar denominated stablecoins, right? But in theory, that doesn't necessarily need to be the case going deep into the future. But at least my definition of stablecoins, to put it concretely, is that something that keeps one standard of living constant across time.
Yeah, that's a great answer. I think stablecoins are incredibly important and have pushed the landscape forward for sure. So the next thing I'd like to know is what does the Frax ecosystem offer people when they come to your platform? Like what can they do to get benefit out of it?
So this is actually kind of interesting because it's a little bit paradoxical, but one of the main things that I always point out is that from a consumer perspective, no one should want a more floating slash unbacked currency if there's a more collateralized one. So this sounds counterintuitive. This almost sounds like we're saying don't use Frax compared to like DAI or something like that. However, the first thing to realize is that capital efficiency is actually a supply side kind of property. So for example, consider if there was a DAI fork that was 300% collateralized, right? It was basically twice as collateralized as the current version of DAI, but then pretend like all things were equal with it, right? Pretend like it had integrations in Pangolin and Uniswap everywhere, all of the liquidity was the same. As a user, you never would want to use the 150% back DAI if there was a fork that was twice as collateralized, right? It was 300% back, all things being equal, right? And having the same amount of liquidity. Why would you use something that's lower collateral just in case you need the 300% in case ETH dumps really hard or something. One of the first things I always say is like, yes, part of the reason algo stablecoins are disliked, other than the fact that a lot of them haven't worked out, is that from the supply side, capital efficiency is about creating new money cheaper. It's not necessarily about making the end user feel more like they have higher collateral, right? And so that's a very counterintuitive thing. First, to answer your question, there's not necessarily anything directly on our platform that makes it much more unique for people to use. However, the more projects that we work with, like Pangolin and things like that, the faster we're able to expand, provide liquidity, even mint Frax into the Pangolin exchange, increasing its liquidity. Versus if you think about how DAI works, for every time that DAI is generated, you need 150%, right? For every $1 of DAI created, you need $1.50 of Ethereum or whatever collateral to back it. So they cannot actually do a lot of the things that we can do with Frax, such as mint Frax expansions and add it to liquidity on Pangolin, immediately making it even more liquid than whatever DAI pair or other fully over collateralized stablecoin that there is on Pangolin or other exchanges. From a user perspective, yes, it's probably not as awesome sounding, right? That's the truth. But from a capital efficiency perspective, we're going to be able to provide much more liquidity, much deeper depth, much better expansion to cross chain in initiatives with Frax than, for example, over collateralized and expensive to create stable coins can. So you kind of have to have a good economic background there.
Yeah, no, that was a great answer, and it was very insightful of how you mentioned a lot of terms, liquidity, and I can think of one like the speed of money, the speed that money moves around within these chains and this ecosystem. Like you're saying, the more liquidity and the freer this money can move around, the better the ecosystem is, right? The more freedom people have to make financial choices. So that's really great.
Yeah, exactly. And so the most important part here is, like, for example, I saw that like Dai has, I think it was like a few million in liquidity on Pangolin. One of the cool things with Frax is that we can probably crush that in terms of if we also had the same kind of like attention or incentivized pairs or whatever as Dai, because in order for you to mint Dai on Ethereum L1, you have to lock up 150% of whatever amount you want to come in and take to Avalanche, right? But with Frax, we can actually print some programmatically, right? Some expansions. We call these AMO modules, and they're basically ways that Frax can expand into different protocols. But it'll be much faster and capital efficient. And usually people are afraid, right, that if you're just printing money, then the peg is going to break. But people now have 6 months of evidence that we've never broken the peg a single time. So it's actually starting to be very, very powerful. And people can get exposure to the expansion of the protocol the same way they can by holding MKR for MakerDAO. There's a Frax share token called FXS. They can participate in governance and get some signage expansions or fees through burns. So it's a very community oriented and on-chain protocol, right? Like you can't invest in Tether or USDC, but you can invest in Maker and Frax and like Terra and these things, except Frax is kind of the most capital efficient one.
Yeah, that's great. I'm really excited to see what Frax can do on Avalanche. I think it's a very powerful system. So there's a couple more questions I'd like to ask. So one, I'll just lay them out so people can get ready for them. I'd like to learn about the integrations that Frax already has within the DeFi ecosystem. I'm sure there's some big names that you're working with. I'd like to talk about the two tokens in your system, the Frax stablecoin as well as the Frax share. And then let's just talk about, how can Frax and Pangolin work together moving forward?
Yeah.
So those are some things we'd like to discuss. Yeah.
Those are great questions. So we have deep integration and relationship with a lot of Ethereum DeFi ecosystem L1, which is where the base mechanism lives. However, like I said originally, Frax is a multi-chain endeavor. Goal is to create a fully decentralized stablecoin that expands into different chains where needed, right? And so literally, Frax can be expanded into different networks like Avalanche. We're also building on Moonbeam and the Polkadot ecosystem. We're on Polygon. And so in order to do that, we work with the top, DeFi projects in that chain, such as Pangolin. It's kind of the Uniswap of Avalanche. And we already have a lot of deep integration. Like we have the first algorithmic stablecoin on Curve, for example. We have Curve and we have deep Curve gauges there, which I'm personally really proud of, because Curve is kind of the innovators of the stable swap principle, and they've never added an algo stablecoin until Frax, right? And so that says something really good about our performance. And then we're basically on a lot of places in terms of, we have a partnership with Sushi in terms of their sushi farms, both on Polygon and on Ethereum. It's just a very long and good list. In fact, you can see it on app.frax.finance/integrations, just some stuff to look over. Rari Capital, we have new lending pools. We're on Cream, we're on Wirearn, and just expanding very quickly, right? People understand that the idea behind Frax, the concept of fractional capital efficiency, is very legitimate, and the performance is extremely sound. So it's a very exciting stablecoin project. As for the Frax share token, we'd like to also bring that over, obviously, to Avalanche, and also bring it to Pangolin, because that's how people can get involved, right? That's how they can earn these shares. They can purchase them. They can be, entitled to the future signage and revenue of the Frax protocol, which is like the first stablecoin protocol that actually has signage that keeps the peg soundly, right? And it's a very important thing that we make sure that people can actually feel invested and have the upside to the project as well. So wherever we bring Frax, we try to make sure we bring Frax shares, so governance and participation and investment for whoever wants to participate is available to them. So Frax is 2 tokens, and we'd want to bring the Frax share token as well.
That's great. No, those are some really big projects doing great things that Frax is already integrated into. So it's good to hear.
I also forgot, we just actually released a really good collaboration with Olympus Dow, which I'm really into, because Olympus Dow is actually a new kind of up and coming algorithmic stablecoin project that is not actually pegged to the dollar in terms of price. And it kind of is really interesting, because part of Frax's very long-term vision, and so I didn't really bring it up originally, but is to create like a new fundamental unit of account that keeps standard of living and stability the same without it being the dollar, right? One Frax per $1. It's a new unit, but that's really far out and part of our grand vision. But what's really cool is we started a really cool collaboration with Olympus Dow. So if you're kind of interested in stablecoin theory, what does stability mean, which is kind of what we started this conversation about, definitely check out our collaboration this week. You can earn some Frax shares in Ohm, which is the upside token in Olympus Dow, as well by farming it. We have a good pair. So we're just getting involved with all of the most interesting and top projects on L1 on Ethereum. And so we're just really excited to expand to Avalanche together. We've had a few great partnerships like Snowball on Avalanche, but we really just want to blitzkrieg scale into the Avalanche ecosystem now.
Yeah, that makes a lot of sense. And I see on Snowball you already have something like almost $400,000 in the Frax stablecoin, so that's really great. So let's talk a little bit about how Frax and Pangolin can work together moving forward. Like, what integrations, collaboration do you see between our projects?
We are on Snowball, and we've grown quite well in size given the kind of nascent stable swap ecosystem. But one of the cool things is I think that we're going to be one of the most accessible stablecoins from the get-go on Avalanche, which is exactly our goal and Frax's strong suit, because we're able to expand more easily. With Pangolin, I think what would be fantastic is if kind of Frax is one of the top choices for dollar-denominated stablecoin pairs. So, for example, a Frax PNG pair, and then also can't forget about that Frax FXS pair, right? The Frax shares, so that we can start having Avalanche native users feel like they can own a piece of the upside, participate in Frax governance as well. The thing we're really excited about is to not just be on a stable swap pool, but to be everywhere where DeFi is. So Snowball, Pangolin, other kinds of lending on Avalanche that's actually starting. I've been talking to the Banky guys. They're very smart and brilliant. So hopefully going to be able to get Frax there to increase its utility. But it all starts with liquidity, right? Utility and usage all starts with liquidity. And so with Pangolin, I think that's one of our most important places to initialize the expansion on Avalanche.
Yeah, no, that makes a lot of sense. that there's benefit to both projects and the entire ecosystem if Frax were to just start building here, bringing community over, bringing liquidity over. That sounds really great. And as from Pangolin's perspective, we really love supporting projects like yours. You have a great community. Your team is super responsive, smart, does things safe and correctly. And you're right, the lending solutions that are coming, like Banky, are going to be huge. And having stablecoins like Frax is very important to those types of projects. So from Pangolin's perspective, we're going to do all we can to help with marketing, with rewards pairs, with getting just our community informed about Frax and how to use it and where to get the stablecoin. So I'm really looking forward to moving to the future with Frax, with Banky, and just getting it a good presence on the Avalanche Network.
Yeah, thank you. We're really excited about it. And I think that we'll really be able to explode in traction, liquidity, and the size of Frax and Frax shares on the ecosystem. There's a lot of people in our community actually that are Avalanche natives. So really excited to bring this, and they'll be really excited to hear about it as well.
Great. So I'm just going to do a time check with Josh. Josh, do we have time to get through some Twitter questions?
I'm perfectly fine to sort of continue on. I do have a few questions that I wanted to ask myself, Sam, if that's okay.
Yeah, of course. Fire away.
Yeah, cool. And I know that you'd said that you wanted to bring Frax over to the Avalanche chain, but will you be also bringing the Frax shares too? And also, what's the benefit and also the incentivization of the Frax shares?
Yeah, so like I said, we're really keen on making sure to bring the complete system to whatever chain that we were trying to kind of expand into, because part of the whole point about these on-chain stablecoins is, yeah, they're decentralized, or they're not connected to a bank account like USDC or TUSD or whatever, or Tether, but they allow people to form a very strong, cohesive community to govern it and to have the upside of the project. The same way that Maker people can be invested for having MKR tokens. This is the same way, right? We definitely want to bring Frax shares over, incentivize people to want to go into the project if they believe it's investment. Like, obviously, it's not financial advice, but if they're interested in this kind of stuff, if you want to invest in Tether, you can't, right? Like, you need stock in Bitfinex. If you want to invest in USDC, now maybe it's slightly easier because there's, Coinbase stock is public, but it's still not the same thing, right? If you want to invest Terra or Maker, it's trivial, right? You just buy the token. It's even easier with Frax because you just buy Frax shares. And also, one of the mechanics actually is that you can stake it for VFXS and you immediately start earning the signage profit and fees and things from the system. And it's so obvious that you have a share in this kind of decentralized Federal Reserve, so to speak, and you're earning cash flow from having a share in the governance token, right? And so, for example, right now, you can actually earn over 150% APR by essentially, basically having Frax shares and staking it, right? So we definitely want to be able to make people, able to participate in that if they so want. So obviously, we'd like to bring the second token over, which right now is on Avalanche in terms of deep liquidity. We're just on Snowball, but we can hopefully change all of that with Pangolin partnership. So we're pretty excited.
Yeah, sure. And where does the profit come from? Sorry, because I understand that you under collateralize the stable token, but then there's profit generated. And so where is that kind of coming from? Is that coming from the staking, or where is the profit generated if it's stable?
Yeah, so this is actually interesting because it's part of how our protocol works. So we have these things called algorithmic market operations modules, called AMOs, and the cool thing about this is that this is how Frax kind of expands, right? Because as I was saying, Frax, the protocol, generates fresh unbacked Frax as a ratio of the collateral ratio, which goes up and down depending on what the price of the Frax stablecoin is. The protocol actually expands money into different places, such as we have a Curve AMO that the protocol essentially mints cash into and gets Curve LP tokens. It also has AMOs in different places like Wired, where it puts idle collateral there to earn yield. These are kind of like programmatic, or we call them algorithmic market operations, and these all earn money for the protocol, right? It's essentially like an algorithmic central bank. And the excess value that comes in there, there's two things that could happen, right? Either it can go back into further expanding the supply of Frax and expanding the system, or some of it can go back to the FXS holders, right? Because they're the governance token that gets the cash flow. And so a lot of that currently goes back to 50% of that actually goes back to the Frax shareholders. So that's where that 150% is coming from.
Right. Okay. It's like you're kind of outsourcing your yield generation to other sort of liquid swaps. Then is that where it comes from?
Well, we're out. We get the yield from the expansions of the money supply and deploying the idle collateral. Yes.
Okay.
Great questions, Josh. Appreciate that. And I think that's a good segue into our Twitter questions, because someone asked about the profit and revenue. So what we've done on Twitter is we've asked the community for questions for Frax, and we've selected the best 5, in our opinion, for an actual giveaway. So these 5 community members will be getting a giveaway. And there's 2 that I'd like to really talk about. So the first one is around security, and the second is around scalability. The first question by Charlie Potts is, do you mind telling us what the security mechanisms of Frax are? They're asking about audits and how Frax keeps its code and its users safe.
Yeah, that's a great question, especially if there's going to be a lot of value that's transacted, with the Frax stablecoin. So one thing I'm really proud of, knock on wood, is that we've never had a single critical security incident or any loss of funds. We take security of paramount importance in terms of both dev cycle as well as being open, having anyone be able to inspect the code. We recently got our second audit since launch by Trail of Bits. Our first one was by Surtech, and they found 0 critical issues. So we're also really proud of that. Trail of Bits is the top kind of audit firm in the space. So all of the best projects get Trail of Bits audits. For example, Uniswap V3 was audited by Trail of Bits before they released it. So all of the very top protocols in the space that need the most security usually get and schedule a Trail of Bits audit out in advance. And ours actually found no exploit or vulnerability, and we'll actually be publishing that audit soon. As soon as they publish it officially themselves, we'll be linking to it and sharing it. So we're really proud of that. We take security extremely seriously. Also, just economically, just again to highlight the performance of the peg and also everything in the protocol. We've never broken the peg a single time, right? So people are rightfully so skeptical of algorithmic stablecoin performance, but after a certain while, numbers don't lie, right? So one thing I'm also really proud of is that battle-tested, tried and true mechanisms like Frax kind of quells any criticism, right? It's difficult to take people seriously if they, say algorithmic stablecoins don't work, and then you put Frax in their face and they, can't really argue with numbers, right? So we take a lot of these things very seriously, yes.
That's great. That's really awesome to hear that you've not only gone through a first audit, but a second one from a different company. And then just the fact that the peg has never been broken, very impressive. So the next question from the community is from Manu, or they are asking about scalability issues on the Ethereum network and what your experience has been like, working on Ethereum versus the other chains. Why did you start on Ethereum versus another chain? Things like that.
I mean, let's be real, right? Like, yeah, the fees are expensive on Ethereum, but Ethereum is also the top smart contract platform. There are very promising and important, in my opinion, platforms that are coming that rival Ethereum. and I'm very bullish. Avalanche is also why it has our attention, and it's on our short list of cross-chain implementations of Frax to expand to. We have gotten a grant from Avalanche as a stable coin to expand into their network, and we're really proud of that, and we really think that the technology that Ava Labs has built really good. With that said, obviously the most liquidity and TVL and DeFi usage is on Ethereum L1. So directly to answer the question, that's obviously why we started our original implementation on L1, because it just makes the most rational sense.
Yeah, that makes a lot of sense. You want the most users and the most liquidity, so that's why you started on Ethereum. But now you're, seeing the potential of other chains and expanding there too. That's really great.
Exactly.
Okay, so we received 5 questions, and those are the 2 I really wanted to touch on just for the sake of time. But I'm just going to read off the Twitter names of the other questions that were selected. So we've got Chicago Mogo, Patsco77, Charlie Potts, Manu, and Anjana, who asked really great questions that we'll be reaching out to for the giveaway. So thanks everyone who submitted questions.
Yeah, thanks everyone. Also, it was great to also read them on Twitter. There's a lot of questions posted. Feel free to please join the Frax Telegram and Discord communities, as well as just ask us on Twitter as well. We're very approachable and always there, and we always are talking with the community. So feel free to join us on Telegram.
Yeah, go give Frax a follow, hang out with their community, and ask questions. And same for Pangolin. If anyone watching or listening to this has questions about Pangolin, hop into our Telegram or Discord. We'll be very responsive to questions. All right, so are there any final topics or questions from you both, Josh and Sam, before we wrap up today?
Yeah, I did have one more question.
Go ahead, yes.
Yeah, I know that you mentioned that you were working with multiple chains. And so does that mean that you'll be building in a bridge of some sort for stable coins?
Yeah, so this is actually a great question. Part of our medium-term vision is actually kind of to be a cross-chain, highly liquid stablecoin, as opposed to kind of a like DAI or something where it's predominantly on Ethereum or L2, and it's just wrapped everywhere else. And the answer to that question is, yeah, we kind of see ourselves as kind of the Thorchain of stablecoins. And what that means for people that aren't familiar with Thorchain is Thorchain's a cross-chain liquidity swap that allows people to exchange, tokens, even, through Bitcoin as well as Ethereum and other things. We want to focus more on the stablecoin aspect, cross-chain, but the answer is yes. We actually have some cool stuff going in that area. But the main first thing to do before having a successful cross-chain liquidity product is to actually be on multiple chains and be highly liquid. So that we're in that phase currently.
Great, thank you for answering that.
Yeah, that's a good question. Getting liquidity across chains isn't trivial, but it's getting a lot easier as projects build out new ways to do it. So that's great to hear. Okay, any closing thoughts, Sam or Josh, before we wrap up this interview?
No, I'm really excited to hopefully get on Pangolin and more into the Avalanche DeFi ecosystem.
Yeah, we're excited too. So thanks everyone for tuning in. Thank you for the great questions, and look for more content from us going forward. Thank you.
Thanks, guys.
Great, thank you.